All right, today we're going to talk about the Sensex. It's one of the most important financial numbers in all of Asia, and it's a number that basically tells the entire story of a nation's economic journey.
Okay, just take a look at this number, 85,000 and change. On October 29th, 2025, that single figure represented the combined power of India's biggest and most important companies. We're talking trillions of dollars, all wrapped up in one number.
But, what does a number like that really mean? How on earth can it capture the financial heartbeat of one of the world's biggest economies? Well, that's exactly what we're here to unpack.
And here's how we're going to do it. First up, we'll nail down what the Sensex even is. Then we'll peek under the hood to see how it's built. After that, we'll take a trip through its wild 40-year history, see how it survived some major financial storms, and finally, we'll talk about why any of this should matter to you.
So, let's just dive right in. Let's start with the basics. What exactly is the Sensex? Well, the name itself is a pretty clever mashup of two words, sensitive and index. A stock market analyst named Deepak Mahoney came up with it. At its core, it's the main benchmark for the Bombay Stock Exchange, or the BSE. And fun fact, that's the oldest stock exchange in all of Asia, founded way back in 1875. And this right here gets to the heart of what it does. The Sensex isn't just a list of stocks, it's seen as the actual pulse of India's markets. So whenever you hear a news anchor say something like, the Indian market is up today, you can bet they're talking about the Sensex. So how do you even build something like this? How do you take an entire sprawling economy and boil it down to a single number? Well, it all comes down to the who and the how. And this is where things get really surprising. The entire Sensex, representing that massive economy, is made up of just 30 companies. Yep, that's it, only 30. But these aren't just any 30 companies. They are the absolute titans of Indian industry, the biggest, most stable, and most actively traded companies in the whole country. And getting into this exclusive club is tough. The committee that picks them has a super strict checklist. You've got to be huge, your stocks have to be traded a lot, and you need to actually make money from your main business. Plus, you have to have been listed on the exchange for at least a year. But here's the most crucial part. The committee makes sure the final 30 represent a balanced mix of different industries. Banking, IT, consumer goods. So the index gives you a true snapshot of the entire economy. Okay, so how is that final number calculated? It uses a method with a kind of fancy name, free float market capitalization. But the idea is actually pretty simple. Think of a company as a big pizza. Some slices are held by the founders or the government. They're not for sale. The Sensex completely ignores those slices. It only counts the value of the slices that are available for the public to trade. This gives a much more realistic picture of the market's true value. The whole process might sound complex, but it's pretty logical. For each of those 30 companies, you figure out the value of its publicly traded shares. Then, you add all those values together. Finally, that huge total is compared to a base value from way back in 1979, which was set at just 100. And that is how you get from a humble 100 to over 85,000. And that journey? Wow, what a story. The story of the Sensex climbing from just 100 points is really the story of modern India's economy itself. I mean, just look at this journey. It took over a decade just to cross 1,000 points, then another 16 years to hit 10,000. But after that, the acceleration is just staggering. We're talking about it jumping from 40,000 to 80,000 in just 5 years. The growth has been absolutely explosive.
And these are not just abstract numbers. Each one of these milestones tells a story. That jump in the 90s, that was fueled by India opening up its markets to the world. The boom in the 2000s, driven by India's rise as an IT superpower. And the more recent surges, well, that reflects its arrival as a true global economic engine.
Of course, that journey has not been a straight line pointing up, not even close. Remember, the S in Sensex is for sensitive, and for a very good reason. It has weathered some incredible storms. It's a barometer for the bad times as well as the good. Its movements show just how interconnected India is with the global economy and how vulnerable it can be to shocks. But, it also shows this remarkable ability to be resilient. And let's look at two of its darkest days. In 2008, the global financial crisis sent it into a nosedive. Then in 2020, the start of the COVID pandemic caused a massive single-day drop of almost 4,000 points. These moments show just how hard a global panic can hit the market. But the real story is what happened next. In both cases, the index didn't just recover, it roared back to new record-breaking highs. So after all of that, we land on the most important question of all. Why does any of this matter? Well, it boils down to four really crucial things. One, it's the main benchmark that all other investments are measured against. Two, it's that vital sign for the country's economic health. Three, investors use it to see how their own portfolios are doing. And four, it's a huge signal for foreign investors who are deciding whether or not to put their money into India. So the next time you see that number flash on a screen, whether it's 85,000 or 95,000, remember what you're really looking at. It's more than a stock ticker. It's a single data point that contains decades of history, of policy, and of human sentiment. It's really the story of one of the most dynamic economies on the entire planet. The Sensex has told the 40-year story of India's incredible economic rise. So the real question is, what will its next chapter tell us about the future?
अगर आपको वीडियो पसंद आया हो तो लाइक, शेयर और सब्सक्राइब जरूर करें।